Hello everyone, my name is Horvat and welcome to a new video analysis in which I will cover Euro dollar, Aussie dollar, dollar yen, crude oil and DAX. Now on Euro dollar, we have seen a slower price action for the last 2 weeks, but this is not a surprise. Markets sometimes needs to slow down, especially after such strong moves like we have seen in the last few months. So we see Euro dollar just slowing down in a corrective pose with an ongoing wave C that can be targeting this 100 projection level, where wave C will meet the distance compared to wave A. Now on a daily chart we see a price action now slowing down in wave 4, which is part of this 5-wave decline for wave C to the downside. Now this first wave was extended, wave 1, so wave 3 is shorter but still a valid count. Okay, only wave 5 must not be shorter than wave 3 if we consider the fact that wave 3 is already shorter than wave 1. So the important is that wave 3 is not shorter than wave 1 and wave 5 at the same time. Okay, so for now this counter remains valid. Now the only question is when and where this wave 4 will complete rally. Well, notice that this, as you know, 38.2% is the most common Fibonacci level for wave 4. Okay, this is still higher. Okay, the second thing is that when wave 4 will go underway, you will typically see a reversal back to the area of the former wave 4. This comes in exactly at the same levels, around this 38.2%. Okay, the second thing is that this wave 2 was quite complex. It was unfolding around 33 days. Okay, and so far wave 4 is unfolding for just 15 days or so. Okay, so wave 4 is usually more complex than wave 2. It will take longer time to unfold. So if we consider all these parts, then we can assume that this wave 4 is still incomplete and that this correction will go more complex. Now, obviously, some would already label end of a wave 4 at this latest swing high, because this rally actually can be counted in 3 waves. It was made in 3 waves. Okay, but then because of this 38.2%, because of former wave 4 and so on, I suspect that this is only wave A that can be either part of a flat or of a triangle. Maybe this will unfold as a double zigzag. Okay, but the next thing is that if I connect the trend line, okay, when you assume that wave 4 is complete, okay, then you can connect a trend line from end of a wave 2 and end of a wave 4. Let's say that we assume that wave 4 has finished here. Okay, then when you have this trend line in place, I do not want to see any retracement, any touch of this trend line. If this will happen, then I will assume that this is part of a correction. Okay, I have presented you here on this chart for a better understanding. Now here we have a nice example of wave 1, wave 2, then extended wave 3, wave 4 and wave 5. Notice that this blue wave 2 did not go anywhere near towards this red trend line. Okay, here on the right we can see wave 1. Then let's assume that this, we thought it's a wave 2 high, like we labeled it here, but then price moved back towards this trend line. In that case, I would not label this as a wave 1, wave 2 and another 1, 2 scenario. Instead, I would rather label it as an irregular correction or a flat correction. Okay, more importantly, if you see that, if you suspect that market has either completed a wave 2 or a wave 4, then you make a trend line, and if you see that price will still touch this trend line, then we can assume that this leg is not start of a new bearish trend, instead is part of a correction. Okay, so that's why I think, because we have seen a touch of this trend line and because actually the downward move is still very slow, I think that this is just wave B, still only second leg of incomplete corrective movement. Okay, also This is one part. Then, as I said, we have 38.2% a little bit higher. We have former wave 4 a little bit higher. Based on time projections, compared to wave 2, we still have time to unfold this wave 4. So all in all, I think that this is either will transform into a double zigzag, into a flat, or maybe into a triangle. Okay. At this stage, I would not be shorting euro dollar. Even if I'm wrong and the euro dollar will go straight to the downside, that's okay. But based on my analysis, based on my trading plans, I want to stay aside for now. Okay. Also, then if we take a look on a daily chart, on this technical chart, always when market will make a pullback in a correction, you will typically see RSI to retrace back towards 50 line, and also the price could retest 50 period moving average. This 50 period moving average is in yellow. It's still a little bit, it's not a little bit, but quite a lot higher. Also, RSI is not anywhere near at 50 level. So all in all, this also tells me that market could be correcting. Also, take a look at these Bollinger Bands. Okay, you can see here move to the upside and here move to the downside. So actually this, if you make a line here, I can see contracting Bollinger Bands, and this tells me that market is moving sideways. It's not I don't see any progression in the direction of a larger trend, any strong move. So to me it tells me that market is still in a corrective phase. Okay, and now let's take a look. We said Aussie dollar. Just a second. So on Aussie dollar, we can see a very deep decline on this weekly chart from 2011 high, but still I think that this can be a corrective movement because of overlaps here back in 2013. Then we went sideways and now huge move to the downside. So, but it can be wave C. However, because it's wave C, I will count it an impulsive wave, and because the market is in a downtrend, I will stick to this trend. Okay, so for now I'm still bearish on Aussie dollar. We adjusted the wave count around 3 weeks back or so. We count this as an extended wave 3 that is now finished. Okay, so if extended wave 3 is complete, then you would expect a retracement into wave 4. So based on FIB levels and based on a former swing lows, I'm looking for a retracement back towards 23.6, maybe even 38.2%. Okay, but this is the region that I would love to see a reversal back into before we go again to the downside. Now 23.6 could already be the upper range for this wave 4 if we consider that each correction, okay, was actually very small. Okay, we haven't seen any dip, any huge pullbacks, so I would not be surprised if market would already turn bearish after a test of previous lows. Okay, we also know that former lows, okay, when broken, could turn into resistance. Okay, now on the 4-hour chart, we can also see this broken trend line of a 5-wave decline from January highs. So when this trend line gave way here, actually we are sideways now, we obviously will label this move as finished. Okay, because we are outside of this downtrend channel. So it looks like the trend has changed. Also here, a rally from the low was very strong, so while the market is now very slow. So I suspect that this was first leg within minimum 3-wave rise. So I will be looking back towards this 50 and 61.8% compared to former 5-wave fall. Also there is a former wave 4 around 80 psychological level, so definitely I will be looking and expecting more gains while the market is trading above these lows. If these lows would be taken out, then obviously we would have to adjust the wave count, but as it stands right now, I see slow move, I see a completed 5-wave of decline, so it looks like the correction is now underway. Okay, now let's take a look on dollar yen. This was very interesting recently. Now on weekly chart, we are tracking an extended fifth wave, which is in progress here, as you can see. Now I think that prices are still in a red wave 3 because this red wave 3 must be made by 5 subwaves. Now on a daily chart, if we zoom this in, you can you can actually see that the market slowed down recently, but I see this as a triangle, and it means we are in a wave 4 and that we expect higher prices for wave 5. Now the question is this triangle maybe already done, or we will see another pullback for wave E here? Well, it's a tricky question and I don't know the answer at the moment. We will have to wait more time. Because both wave counts are valid and the market is still rising. In fact, the price is already above this trend line, so if we'll get today a daily close price or maybe even extension above 120 figure, and more importantly above this high, okay, above this high, swing high from back from, what's this, December 23rd. Okay, if we'll see break above these levels, then I think that triangle will be considered as a complete. If today into the US close we will see a reversal in price back in below this trend line, back into this range, then I would call for free wave retracement for wave E. So this is one scenario. The second scenario is that triangle is actually already finished here. You can see alternate counts for wave D, peak here, wave E could be done here. So if you remember our, I don't know if it was a video or webinar, I said that it's not important if market will complete a triangle with wave E already here, or maybe is this just wave A, wave B, and will follow just wave C to the upside for wave D. In either case, we expected third leg to the upside, okay? And you can see actually this has happened now, and now when this has unfolded, we definitely want to be a little bit more patient to see now if this was all from a triangle or we will go maybe even more complex, okay? So at the moment, at this stage, I just cannot confirm which count is correct, but anyhow, I'm looking for higher dollar yen, expecting sooner or later a break above those highs from 2014 that were established back in December. Now let's take a look on crude oil, because this market has finally started to move again. Now here on a weekly chart we are tracking a huge correction in wave B. Now this is first leg wave A, a free wave movement. Now I'm tracking a second leg wave B, which should also be made by free wave. So this was first free wave and now I'm second a free wave to the downside. So when you're tracking a correction, a flat correction, you can see a test or even break beneath this start point of this black wave A, okay? So I would not be surprised to see this 30 level tested in this year, okay, before market turns to the upside. Also from psychological perspective, it would be definitely a very interesting game. So what I'm looking now is still a little bit more downside is expected with an extended wave 3, then a bounce in wave 4, let's say in the second quarter, and then maybe a final push down for wave 5 of C of B beneath these lows from 2008. Okay, so for now we are definitely bearish here, and in fact we could see much lower levels from here. I'm tracking here an extended red wave 3 still ongoing, while this recent correction from start of January could easily be counted as a flat correction. We have seen a retracement back to the area of a former, wave 4 here. Okay, this was area of wave 4. Okay, we can see that market moved towards this area and then turned to the downside with one leg at the start of February. Also notice that market turned to the downside, or I should say it stopped, this correction stopped at this trend line, connected from the highs. Okay, so maybe we will see either more weakness from here, or this wave 4 will become more complex. Okay, anyhow, I'm expecting that sooner or later crude oil will revisit highs, but at this stage I'm still not sure if wave 4 has finished here, or is this part of a complex correction. Okay, but the short-term swings suggest that we will see a retest of 47.38. Either this is counted as an ABC drop. Okay, maybe this is wave A, maybe this was wave B, and now we are going down for a wave C, back towards this 47 level, 47 level, or maybe we are already moving straight down into wave 3. Now, if you're trading intraday and tracking intraday price action closely, then you will actually see that this drop from 53.90 or so was made in 5 waves. Okay, so we can expect definitely more weakness in the near future. So that's for crude oil, and now let's take a look on DAX. So German DAX on weekly chart, clearly trend is up, so we definitely want to stay with this trend. Okay, we are tracking wave 3. We know that wave 3 usually will hit 161.8% extension compared to wave 1. This comes in around 700 points above current market price, so there's definitely room for more gains. In fact, on a daily chart we see a nice strong higher highs and higher swing lows, so it looks like that this is nice impulsive trend in action. So we are expecting more gains in sessions days ahead, especially after this recent strong leg up. Okay, you can see from here to here. Clearly this appears to be wave 3, maybe even wave 3 of wave 3 of wave 3. So I'm looking for more gains, okay, within a blue wave 3 that should also be made by 5 waves. So I counted this as a wave 1, wave 2, now extended wave 3 in progress. So be aware of more gains after any pullback. In fact, we have seen some pullback in the last 2 weeks. You can clearly see that market made a pullback after it finished a 5 waves within this black wave 3. So a pullback followed back into the area of the support from former wave 4, which was here and here. The market turned nicely to the upside from that region. Also, this was clearly made a 3-wave pullback from the high. Also, another thing, we have seen an overlap yesterday. Let's assume that you would count this as a wave 1, wave 2, wave 3, and you would expect a 5-wave drop. Well, in that case, wave 4 must not trade in the territory of wave 1. Well, this happened yesterday, so obviously if it's not impulse to the downside, then it's a correction. So I think that this was a corrective decline and that we will see more gains. So if this trend line will be taken out, then I would be looking towards 138.2 or maybe even 161.8% extension of this wave 4. Okay, so I'm bullish on stocks, also bullish on dollar yen, but I don't know if I'm not sure yet if we will see that wave E pullback or no. If this DAX will broke to the upside, then S&P will probably also rally out from a triangle, which we also expect. Then probably dollar yen will also stay bullish. Okay, so maybe that triangle is already finished, but we need to wait a little bit more, and we could be looking for new trading opportunity if we get clear break out of the range on dollar yen. Okay, euro dollar, I would stay aside. Aussie dollar could be interesting to the upside because commodity currencies are showing some better positions against the US dollar at the moment. But still, those dollar pairs seems to be corrective phases, so make sure to trade very small and carefully. Okay, traders, that's it for now, and I'll catch you with our new intraday charts on the website. Have a good day.